Welcome everyone to this webinar on e-invoicing in the UAE. We're going to focus on what founders need to know with respect to this new regulation that will come out in 2026. I have with me Shafeekh, who's the CEO of Finanshels. Shafeekh, I'll let you introduce yourself and then we can jump straight into the meat of this topic.
Sure. Thank you, Nadim, for inviting this webinar. My name is Shafeekh. We run a company called Finanshels.com. We help founders or business owners to manage their finance better. We run the finance back office more streamlined way so that they could get a lot of data, how to run their finances. Happy to be invited in this webinar and talk a bit more about how e-invoicing landscape change in this region and how this will impact a lot of our customers. We use Wafeq in the back end. A lot of our customers, how this is going to affect and to a wider audience, how this is going to change and what finance team of founders can be better prepared. So far, the information we have on this.
Amazing. Welcome, Shafeekh. Pleasure to have you on this webinar. I'm the CEO of Wafeq. We're an accounting software we're based in the UAE and Saudi Arabia. We're focusing on serving this region in terms of localization with respect to all the regulation that is coming out. There's lots of regulation that has come out in the last 2 to 3 years between the UAE and Saudi Arabia. We will focus in the next 45 minutes on specifically invoicing. So a lot of founders, actually, before we start, there is a Q&A button. Please share your questions by clicking this button. We will go through them towards the end of the webinar. We're going to try to answer as many as possible. There's many of you in this webinar, way more than we expected, which is great. You can schedule a free invoicing and tax consultation with Finanshels by scanning the QR code. I'm going to leave it here for a minute so that you guys can go ahead and take a screenshot and then reach out to Shafeekh for a consultation. All right. So Shafeekh, can you tell us a little bit about the history of like what prompted the Ministry of Finance to launch this regulation, the e-invoicing initiative?
Yeah, Nadim, I was doing a bit of research on e-invoicing, why government is so adamant on introducing something like e-invoicing, right? And one of the interesting facts that I found out, it's not about tax evasions or finding where there is any tax evasion. It has nothing much to do with the business, as we always talk about founders running blind about their company. They don't have real-time data. The same case happens to governments. So if you look at governments today, they're completely blind about what's happening on the ground. And now, a lot of economic failures or disasters, economies have failed in multiple countries. So this could have been prevented to a large extent if they have a real-time visibility what's happening on the ground in the market. So this is where the idea now, what is happening on the ground. If you have to really understand what's happening on the ground, then you need to know where the transactions are happening. You should have the visibility on what kind of transactions are happening and what are the triple, double effects of this. Now, for example, if one industry fails, like for example, one construction industry fails, right, or real estate industry, what are the other industries can have effect, where it can fail. Another example, what if government looked at the industries which are growing, what we are importing, what we are exporting, and make more real-time decision where to invest the money, right? And what is the real GDP numbers looks like? Are there a lot of circular economy that talks a lot, right? And so how they can get all this data on real time. Now, if you are filing your VAT or taxes today, this is where they get a majority of the data. But if you're filing your VAT on a quarterly basis, right, and takes like a quarter to know what's really happening on the ground, what's going to fail, then governments will fail. And this is where the whole idea of e-invoicing came. And I think UAE is taking a right digitization step to digitize the whole economy, because you have absolute control over what's happening on the ground on real-time basis. That's where I think e-invoicing has came into effect. We can talk more about that as we go.
Okay. And let's say we're focusing a lot, I mean, mostly on business owners in this webinar, Shafeekh, right? And business owners are typically much more consumed in running their business, generating revenue, getting new customers. What do you tell a business owner or founder who comes to you and tells you, Shafeekh, what is all this thing about e-invoicing? Like, tell me, what should I know?
Hmm. Yeah. So I think, one of the thing that, see, you have a larger accountability partner, which is government, which is tax authority, and that you have to digitize your whole operations. Right now, the entry point is, how do you make a sales? If you make a sales today, that has to be digitally recorded, and you should have that digital adoption. This is a simple rule that anybody should understand as a founder. Now, when this has two way, right? One, you send invoices to your customers. Second, you receive bills from your customers. So both has to be digitally stored, and it has to be digitally transmitted to the tax authority. This is a simple readiness. So I know most of business owners in UAE are not digitally adopted yet, right? If you look at a large chunk of offline market, where there is still pen and paper, documents, processing in PDFs, right? So there's a large chunk of people out there who are doing that, and that's gonna change. And it's a mandatory thing to digitally adopt if you are doing a business in UAE, and that's where all about invoicing. So you need to have a provider who give this digital invoicing infrastructure. You need to have an ERP provider, and then you need to set up the whole things and classify things properly. All sort of things has to be done if you are a founder, and you need to prepare for that. It's gonna come very soon. So that's what I would recommend anybody ask about what's the invoicing and what they need to do preparations. So first thing, get some digital provider who move your invoicing system into a digital solutions. That's number one, has to be done, any founder that doing business in UAE.
So a digital meaning, let's say right now I just send the invoice to my customer, I send them a PDF. Is that not considered digital?
No, that's not digital. Yeah. So so now when e-invoicing comes, you need to have a service provider, accredited service provider, where it's an XML format. So I think Nadim, you can also show that how this is happening in Saudi, so we can see really how does it looks like, right? And that then this will be directly transmitted to the FTA. Once the receiving end party also has to approve that invoice, then it goes to the FTA. Then the whole documentation will be validated. The supplier, their TRN number, all the details. So it's a complete digital process. So PDFs, digital solutions, if you are using some invoicing tools, that's not approved, not taken. So all this, or Microsoft Document. A lot of people are using Microsoft Document. I see a lot of real estate companies do that. They issue on a Microsoft. So all will not be taken into consideration for this. So you have to follow the standard providers, use their systems, and then go through the process.
Okay. So your invoicing software needs to be an approved service provider in order to be able to issue electronic invoices.
Yes. So there is a three layer, right? One, you have an ERP layer. Second, that ERP layer connected to a service provider, accredited service provider, who just transmit this data in a way that FTA wanted to see. And then it goes to the FTA. So there are three layers. That's how it is being done. Or if your ERP provider is accredited, then that's the only one layer that is required. I don't know how that is done in Saudi at this point, Nadim. So maybe you could share more lights over there. how it is done in Saudi and how Wafeq providing
Yeah,
this.
yeah, that's right. You either have a standalone ERP that is not integrated directly with the tax authority, or that is not actually also a service provider. So in this case, you will have to have your ERP, get a service provider, integrate them, and then the service provider essentially is the one that's connected to the tax authority.
Hmm.
Or you can have also ERPs that are natively integrated with the tax authority. So this will be, for example, this is the case of Wafeq. We will be both your ERP or accounting software or invoicing solution and the service provider at the same time. So you don't need to build any integration with a service provider. In Saudi, it's the same thing. So the only difference between the UAE and Saudi is that in Saudi, actually, anyone can go and integrate with the tax authority.
Hmm.
You can just, spend a few months building an integration with the tax authority yourself if you have the resources. Um, However, in the UAE, you cannot just go and integrate with the tax authority. You have to go through an accreditation process to become a service provider. And typically, they will not let anyone be a service provider because, from a practical point of view, if you are the FTA, you don't want to deal with tens of thousands of parties trying to integrate with you. It's much simpler from a support point of view, from an organization point of view, to only deal with a handful of service providers and then let the end SME deal with the service provider, right? And this is what was adopted, the PEPL network, which you might,
Yes.
listeners might have heard of this terminology, of the PEPL network. The PEPL network is a European standard, and which is what the UAE is adopting. This is how it works. So the taxpayer works with the service provider, and the service provider connects to the PEPL network, and the PEPL network has the FTA connected to it. But what we can maybe talk a little bit about this later on. Okay.
Yes. And I have one more question, Nadim, here. Now, when you say that, so it's not mandatory to have an ASP in between if you are integrated directly with the FTA. That's what you're saying, and that's the case in UAE also going to be.
In Saudi is not mandatory. It's not mandatory. You can integrate yourself directly with the tax
Mm.
authority. In the UAE, it's mandatory. You have to appoint a service provider. You cannot directly integrate with the FTA. You have to go through
Okay.
one of the approved service providers.
Okay. Okay. Got you, Nadim. Yes.
And so if we talk about like who does this apply to? If I'm, let's say, I'm a small business, let's say I'm not even VAT registered, does this apply to me as well?
Yeah. So I think this is very important to understand whom it is applicable today and how this landscape going to change. Now, if you are a B2B founder, business owner, if you're doing B2B, yes, it's applicable. If you're doing B2G, yes, it's applicable. If you're doing meets B2B, B2C, it's applicable on B2B side. But if you're doing B2C, it's not applicable. That's one category on a wider perspective. Second, turnover. Now, currently, UAE has mandated that they will go live on July 31st. July 31st next year, 2026, they will go live for the companies who are doing above 50 million. That's a pilot. They'll start pilot and you can voluntarily adopt the invoicing. Mandatory go live is 1st January 2027. So that's next year. Mandatory you have to. So you should be ready with all the preparations next year, and 1st January should be officially live. So before that, all the trust run, pilot run has to be done, and anybody can voluntarily adopt, and that's a good time to adopt. Now, if you are doing above 50 million, so you have to be worried if you are doing above 50 million to make sure you are fully compliant. Now, also if you are a B2B, B2G business or B2B, B2C business. Second thing, if you are doing below 50 million, like which you asked Nadim of small business, SME segment, they have to comply by 2027 July. So again, pilot project will start on 31st March 2027. 1st July 2027, they will go live. So there's a 1.5 year time from here to go live. And almost 15 months, you can start voluntarily adopting the invoicing. Governments, it's they have a bit more stretch rate. They go live on October 2027. So that's the whole applicability. Hope that's clear. Did I answer your question properly, Nadim?
Yeah. B2G is business to government. So
Yes.
if you're dealing with the government, sending B2G or invoices to the government, this is applicable. B2B, and as you mentioned, B2C, it's out of scope. B2C is out of scope at the moment. Maybe it will come in scope. In Saudi, it was in scope. It is in scope, actually. All invoicing is in scope in Saudi. Okay. And okay, let's move to Shafeekh. How, like, if I am I'm running a small or medium business, um, how will things change for me practically on a day-to-day once e-invoicing goes live?
Yeah. So that's a very good question, Nadim. That's where nitty-gritties goes into details, right? So one of the main thing now, you have a proper ERP system for invoicing. That's one. Now, technically, do you have proper customer database? Your master database has to be strong, has to be legally validated. That's, I think, a lot of companies don't create proper legally validated ledgers, right? So that has to be there, and TRN numbers of these companies has to be collected properly. You have to classify properly. A lot of people classify like zero rated, VAT exempted. So this classification has to be proper. Free zone, non-free zone, all these things has to be properly classified. So your invoicing has to be clean in essence, and it has to be structured properly. And also you should have the workflows. What is the approval workflows looks like? Because you don't want to have some cases where invoices received and you haven't approved, or you have rejected, all these cases. So you have to define workflows, how you're going to map it. Now what about the refunds? What about discounts? What about credit notes? Right, all the edge cases that you need to map and build processes and workflows, so that you can actually run that smoothly. Right. And now what if the system fails to capture these details? So what is the notification process that you need to follow? So all these things has to be defined for a business. So it's better if you are very process driven, if you have workflows defined. That's where day-to-day operations change. Right. So find a vendor, find ASP, define workflows, how you're going to invoice, how you're going to receive invoices, what's the approval process, what's the rejection process looks like. That has to be defined. Once that is defined, then it's a piloting and taking it an iterate process, because there is not much room for errors in this, right? So it's a fully accurate invoicing process. So that's where the change is there for a lot of business owner or finance folks who are operating. Has to be very particular about the cleansity or cleanliness of how they invoice.
Yeah, that's exactly what we saw also in Saudi Arabia. And I will be doing a lot of analogies with Saudi, because Saudi went live with e-invoicing 2 or 3 years ago. They went live in two phases. The phase two, which is the one that is really close to, which is actually the one to compare with the e-invoicing in the UAE. And it's exactly the issues you talked about. It's the data, your master data. So your customer information needs to be complete, the address, the VAT number, because once you issue an invoice, it has to be validated by your service provider before it can be
Mm.
sent to the customer. So that's quite a big change, which means that if you don't have the right information for your customer, you're going to be blocked. You're not going to be able to issue the invoice. Now, it might not be a problem if you have a small number of customers, but let's say you have hundreds of customers. You need to start the data cleaning process, relatively early so that you are ready once e-invoicing goes live. And you spoke about voluntary participation in the e-invoicing, the voluntary participation phase. Highly recommended because it's totally fine if you make mistakes. During the voluntary, you're not going to be um, held accountable by the FTA. It's an opportunity for you to, slowly, or let's say more comfortably, see the changes in your process, adapt your process, fix your data, so that when the mandatory phase becomes live, it will be completely seamless, as if nothing happened for you.
And Nadim, how it was, what were some of your key learnings in Saudi, that was some of the common mistakes that you observe practically when it's implemented in Saudi from founders or business owners that they were making generally? And
So the biggest change really is that once you issue the invoice, that's it. It's permanently frozen. You cannot change it anymore. Now, of course, we all know in accounting, once you issue an invoice, you should not change the invoice. But we also know that it's very common practice to go and edit the invoice and resend it to your customer. Once the invoicing goes live, and when it went live in Saudi in phase 2, once you reported the invoice to the tax authority, that's it. You can no longer go and modify the invoice. So the way to do it, if you made a mistake, is it's not complicated. You just void the invoice, which your accounting system should issue a credit note, report the credit note to the tax authority, and then you create a new invoice with the correct details. So that is a small change in process, but people become a bit more careful before they kind of finalize the invoice, right? You leave what we're seeing is that you tend to kind of not report the invoice until you're 100% sure, maybe until you got paid, for example, by the customer, then you report the invoice. So there are some behaviors that we're seeing that are understandable, and we expect there will be exactly the same thing in the UAE. You will hold off reporting the invoice, even though it's definitely not recommended. You should report an invoice when VAT becomes due. But this is the main change that we saw. Of course, other than the data problem that we talked about, like if you do a B2B invoice, you have to have the VAT number of the customer and the full address details. So what we've seen is that companies that are not ready are just ending up issuing a B2C invoice, which is called a simplified invoice, which is an invoice that retailers issue to individuals. So some B2B invoices ended up being reported as B2C invoices because
hmm,
the supplier didn't prepare their data. But generally, what we've seen is the tax authority has been lenient with the taxpayers because it's a big change. Having 1.7 million SMEs in Saudi go on
hmm,
to e-invoicing in such a short period of time is a big achievement, and the tax authority um, understands the challenges. So what they do is they don't issue fines easily. They give you several warnings before you even start getting more serious warnings and potentially fines. And probably the UAE will probably do something similar. It is a very big process change, to get a business to
yes.
find an accounting software, change their process, really start getting on board, and so on. So yeah.
Interesting. And would it be possible for you to show like a demo how that works in Saudi for for the people here, just to see, and how it works in Wafeq there?
Yeah, so I'm going to show very quickly how typically the invoicing flow uh, will happen. So this is inside Wafeq. Typically, if you have an accounting software that is, so the way we will implement invoicing, it's going to be native to Wafeq. So it will be part of the invoicing experience. Some software providers, again, will seek third parties, so the experience will be different. But currently, this is how it looks at the moment. You see my screen, right, Shafeekh?
Yes, yes, I can see.
Yeah. So essentially, when you are creating an invoice, I have an invoice that is already prepared. The accounting software will verify that the data that you entered is complete. So here, we've done the verification, and Wafeq tells you this invoice is ready to be reported to Zatka. Zatka is the Saudi tax authority. It's the FTA equivalent in Saudi. So the invoice is ready to be reported to Zatka for final clearance. There's a button here that you can click to report. Whenever you're ready, you can report it to the tax authority. If there are any issues, for example, you forgot the address, you forgot the tax registration number, the software will give you validation errors that you will need to fix before you can report to the tax authority. So once you're ready, you just click report. It will post it to the books. It will report it to the tax authority. And once it's reported to the tax authority, there will be a QR code generated. So if you download the invoice here, and that QR code is proof for both you and your customer, this QR code here. If you scan it not with your phone, but with the Zatka mobile app, it's a QR code that is encoded. So you cannot scan it with your phone. You have to use a special app. So you can use the Zatka app to verify that actually this invoice has indeed been reported to the tax authority. So when you send this to your customer can scan this and can check that this invoice has indeed been reported, or let's say if you're trying to, charge him a VAT illegally, or so that's how it works in Saudi. It will be almost exactly the same flow for the UAE and through the Peppol network. So the only difference, and maybe we'll talk about the differences in a bit. But essentially, the difference is that when you are invoicing in the UAE, you will be able to know whether a customer is a member of this e-invoicing or not. Is he a participant in the e-invoicing network or not? And then the
What does it
second
mean,
thing,
sorry?
so if they are participant in the e-invoicing network, means that they appointed an ASP, accredited service provider, and they obtained a participant ID from that ASP. So
Okay.
by July 2026, we said that businesses need to appoint an ASP, right? So when you appoint an ASP, you obtain a participant ID, which is kind of your ID of your membership to the Peppol network. Peppol network, again, this is the infrastructure that the invoicing system will run on. Okay, so you will get a participant ID and you will be a participant in the network, which means that other participants in the network will be able to look you up. Let's say they will know that, Shafeekh, let's say Financials, I can look them up as a participant, and I can specify whenever I'm creating an invoice that I want to send an invoice to this participant. So that's one difference with invoicing in Saudi. The second major difference, which is actually a huge benefit also, is that so in Saudi, you're only reporting accounts receivable invoices. So you're only reporting sales invoices to the tax authority. Once you report it to the tax authority, your customer will not receive this invoice through the e-invoicing network. You still have to send it to your customer the way you send it by PDF, by email, by WhatsApp, whatever you want. However, in the UAE case with Peppol, if your accounting software supports it, or your ERP supports it, you will be able to receive the purchase invoice that your supplier has sent through the Peppol network. So imagine in your purchases, suddenly you will have a bill that pops up, that shows up, saying you received an invoice from Financials. You want to approve it or not. And a huge advantage here, as you probably have guessed, Shafeekh, is that data entry becomes non-existent almost, as long as you are part of the Peppol network, and as long as your accounting software or ERP supports receiving invoices. Because receiving invoices is an optional is an optional thing in the e-invoicing implementation. Your ASP or your ERP does not need to implement receiving capabilities. What they need to implement, what is mandatory, is sending capabilities. So sending the sales invoices. And so imagine the level of automation, right? That you'll be able to achieve once you start automatically receiving invoices, purchase invoices from your suppliers. No more data entry. Huge time saved.
I think it will save accountant's life better.
Definitely. So
Awesome. Thank you, Nadim, for showing the demo. Much useful to see how things are happening in Saudi, and I think it's going to be same in UAE as well.
Yeah, let's talk about a bit longer term. So you talked, Shafeekh, about the phases, right? So again, can we remind everyone about the important dates?
Yeah. So I will just read it again. The dates. You have phase one pilot program which runs 31st July if you have a business above 50 million. Second, if you have a business below 50 million, then 31st March 2027. So you have 1 year and 3 months. So by the time you can prepare. So these are the most important dates that you can remember. And I would, as Nadim mentioned, would recommend everybody to participate in the voluntary participation because it's going to help you a lot when it goes live.
Okay. And longer term, like, if every business is sending, invoices through sending e-invoices or a participant in the network, does that mean the VAT return will be like deprecated? Like we no longer need to file VAT returns because the government has all the data?
No, I think we need to file the VAT returns. There could be adjustment exceptions. You have reverse charge, but it becomes more easier. It becomes more automated. There will be less manual intervention on that. So you will not
Yeah.
have the jump. So today, if you look at how VAT returns are filed, especially in UAE, right? Like you just give them a number. This is the number. What is the supporting documents for this number is not very clear. So that will change, and then you need to have all the supporting documents stored properly, right? Exceptions. It will not take away completely because you have a zero rated, you have exempted, you have different classifications. So yes, still you need somebody, a tax expert who checks everything, make sure things are proper, and then file the returns. But it will be more automated.
Yeah. Yeah, and you have, you have the B2C transactions, which are, because they're out of scope, you still need to report them, right, in your VAT return.
Yes.
So until they bring in B2C transactions into the e-invoicing network, they won't be able to pre-fill the VAT return for you or automate the VAT.
Yes.
And plus, what about like cross-border transactions? How will these work?
So cross-border transactions, again, you have, they will not, if you have a UAE VAT registered entity, then it applies, right? So if you are getting, example, a bill from Google or Slack, still it goes through reverse charge mechanism. You still need to file the nil returns on that. So that actually happens. And if you are doing export, also the same principles applies, right? That you have an export invoice that goes. So that's gonna will not have much purview on the whole invoicing structure, but you still need to file whatever the rules applicable to make sure it's fully complied.
So Google will not send me an invoice through the PayPal network.
E-invoice, yes.
Yeah. Okay. And if I'm invoicing a customer in Europe, I still need to invoice them through PayPal, through the
Yes.
e-invoicing network. Okay. What is the will this impact audits, Shafeekh? How will this be affected? Do you think it'll make their job easier or harder?
Yeah, see, a couple of things, the whole narratives for accounting will change, right? Because now your revenue recognition principles have to be defined, right? Because you are more aware and more vigilant about how you invoice, and that will definitely have an impact on the revenue recognition. For example, one of the example you mentioned, right? Some customers invoice when they have a payment because they don't have a VAT impact, but that has a net effect on the revenue recognition. So how do you take revenue recognition will be a huge question. The same goes to purchase, right? How do you categorize? How do you split this? So accounting will have an impact that has to be assessed and has to again have a process or guidelines to be looked at and defined. How you wanted to recognize revenue, and looking at both from a reporting lens and a tax lens. So there will be a bit of tax planning has to be done, but it also you have to see from a larger lens how that affect your revenue recognition, your P&L reporting, that all have to put through. And then probably, for companies who are growing, it's always good to have those SOPs or guidelines in place, how you wanted to recognize revenue, how you wanted to categorize expenses. So there'll be a bit of change from that lens. But I think the accountants works load will be reduced from that lens to a large extent, because a lot of digitization is already in place, because that's where they spend a lot of time booking these bills, taking out this bill, sending invoices, right, crushing through this numbers, data entry, all these things will be largely automated, so they could actually do more strategic works.
Okay. Okay. Um, and before we move on to the next segment, which is more on the technical side, how how should founders be prepared, and when should they start preparing? And what is the first thing you want to tell your founder friend on e-invoicing?
Yeah, I think Nadim, you could talk more about this on the technical side, but I would recommend anyone to have an ERP first, or an proper accounting software, ASP provider. That's a step number two. Define workflows, processes, how you're gonna do invoicing workflows. That's all. Then you can do pilot testing, as you mentioned. Clean up your customer data, purchase data, all those master database you can clean up. Then you are probably ready if you have all these things in place. So that's what readiness comes. I think you could talk more on the technical side, Nadim.
Yeah, let's jump into. I'm gonna try not to be too technical. But hopefully, I mean, the goal is for it to be enough information for business owners and founders to be informed. Um, so the way what I would tell a friend who comes to me and who says, Nadim, I heard about invoicing. What should I do? The first thing is I would ask them, like, look, is your software provider, is your ERP or accounting software going to support e-invoicing? Generally, if you can tell basically by the focus of the software, are they focusing on are they localizing or not? If they're not localizing, this is now, we're getting to the end of the year. January is a great time to switch providers, because you're going to have to do it for sure if they are not localizing. Otherwise, you're just taking a big risk. You will have to figure out a solution that will be a lot hairier than just simply switching to a provider that will support e-invoicing. So that's the first thing, is take advantage of the year end now to move to a solution that will support e-invoicing. The second advice is, I would try to understand a bit the size and complexity of the business. So, if you're a 5-person company, you're going to be fine as long as your provider is going to support e-invoicing. Probably you have very simple processes, not much complexity. B2B invoice volumes are typically low. They're not like B2C, which will reduce complexity. So just make sure you're on the right software. And then once you approach the deadline, you can start getting informed in more detail on what changes in your flow. So in the case of Wafeq, what will change once e-invoicing goes live is there will be a step where you need to connect your Wafeq account to the network. This will be generally pretty seamless. Once you connect to the network, that's it. Like the invoicing flow will not change. There will be just additional validation rules on invoices. And that's it. You're, off you go. Very similar to the implementation in Saudi Arabia. So in Saudi Arabia, you connect your tax authority account to Wafeq. Imagine if you've done connections, if you've used software that connect with other software, it's going to be very, very similar, pretty seamless process. If you have a more advanced business, so for example, if you have an online business that where you're using a payment gateway and you issue invoices kind of programmatically or automatically, you're going to need a solution that can serve you. So these are typically API-based solutions. Again, don't want to go too technical, but if typically you have an online business, you need to do a little bit of engineering. You need to have your IT team or engineering team implement these changes. And these typically will take probably, I would say, 2 to 4 weeks. Let's say 4 weeks to be on the safe side. So plan for that. Put this time aside. We're still, it's still a bit early right now to kind of start planning for this, but you want to start to do it, let's say 3 months before July, because from our point of view, we highly recommend you go on the voluntary path. So you sign up to the network before it becomes mandatory, sorry, in order for you to be prepared and no, so you don't stress out when the deadline comes. And so if your solution provider does not support natively e-invoicing, you're going to have to look for a third party. So sometimes it's called middleware from a technical point of view. It's essentially a service provider, an accredited service provider that can hook up with your ERP. This is a project. This is, depending on, again, how much your ERP might be customized or, your processes. We highly recommend you start, 3 to 6 months before the deadline. Again, because these are quite big changes from what we've seen in Saudi, and definitely will be the same here. And we know that software projects or IT projects, they tend to take twice as much as you think they will take. So start as early as you can, at least 3 months before the deadline, so you can finish the implementation and be ready. That's how I would, that's what I would tell a friend. Just to stay up to date, if you have an accountant or you work with an accounting firm, they will keep you updated on the requirements. So, and I think now more and more companies or business owners are hiring accounting firms, especially since corporate tax came in effect. So I'm guessing Shafeekh, your team is super busy and has been super busy this year. And I think you guys will play a big role to educate customers about the importance of being ready for e-invoicing.
Yes, yes. So Nadim, what we are doing is we are just doing a quick impact assessment for customers, just to prepare them ready, look at the workflows. We have a lot of these things designed. So just mapping that into their structure, so they can go live faster and do that whole process. So that's how we are helping a lot of customers in the space.
Yeah. So so we talked about, so from the technical side, also I just want to mention a couple of terms that maybe, our listeners might have heard that they want to understand. So from a technical point of view, and I think, Shafeekh, you mentioned it in the beginning, so a digital invoice is essentially going to be an XML file. An XML file, for if you've never heard of an XML file, it's just a text file with a special format. So it contains structured invoice data. For example, it contains the invoice amount, the seller name, the VAT number, the line items, everything in a structured format. So this XML, there is a standard that is a global standard. It's called the UBL format. So this format is an internationally recognized format. It's common across all countries that implement this. However, each country has some specificities that are local to it. So they add some extensions. So for example, in the UAE uses the UBL format, but they have extra fields because of local regulation, like your VAT, maybe your place of supply, the tax rates, the free zones, all of that, any additional things get to extend the XML or UBL format, the UBL schema of invoices. So what we've heard, for example, often from customers is, they come to us, they ask us, do you support UBL? This is with respect to e-invoicing in Saudi Arabia. And Saudi Arabia has implemented also the XML/UBL standard with some customizations to account for local requirements. And the same thing will apply for the UAE. So because also this UBL format is standardized, it means that technically and practically, you will be able to receive invoices from outside the UAE, from a country that implements e-invoicing, and your service provider will be able to send you, or will be able to receive that invoice in, let's say, the French UBL format, for example,
Mm.
because there are common fields to all the countries, and then there's localized fields. So if your if your customer or your supplier is part of the PEPL network in their country, they will be able to look you up and send you the invoice through the PEPL network. Okay, so that's also how the advantage of using a framework or a network that is also used in other countries, mostly Europe, but also Singapore, Malaysia, and so on, this is a big advantage. And also, by the way, the other GCC countries will also implement PEPL, so Oman, Bahrain. So imagine it will be very easy to exchange invoices between traders within this or businesses in these countries.
And Nadim, I have one question like related to this. How do you see the tech product landscape changing in the whole finance operations? How this will be beneficial for a lot of companies?
Yeah, so obviously there's a big change for companies that are still dealing with paper invoices, right? This is the biggest segment that will feel the impact. If you've already been doing invoicing through PDFs or emails, I don't think much will change for you generally, for most businesses, for most SMEs, because your accounting software or your invoicing software will not, will just, it will not change how you do things, other than the things I mentioned in the beginning with respect to validation of data, and the fact that you cannot edit invoices, after you've reported it. But for those that are moving from paper to a real, like a digital invoice, there will be some big changes. So you imagine, you're going to have to find a solution that can issue digital invoices in a very seamless way, without, let's say, you're in a shop, let's say you're somewhere in Dragon Mart, for example, you're buying something, and the seller needs to issue an e-invoice. Now, in the case of B2C, you don't, but let's say B2B, you're going to have to start using software. You cannot issue a paper invoice anymore. And that's quite a big change. From a solution point of view, it's going to be fine. Like you will get on an invoicing software. Maybe you're going to have your laptop. Maybe you're going to have an iPad application, and then you're going to, issue the invoices there. But it's just this, change from pen and paper to kind of having a device with you in the shop that issues invoices that I think might be the most difficult. For a vast majority of businesses that are B2B, the software, the existing accounting software, which I hope you are using and you're not still in Excel, it will be fine.
Awesome. Awesome. Great, Nadim.
Okay. We have 9 minutes left, Shafeekh. Shall we? We have a lot of questions actually. Shall we start picking some of them?
Yes.
Okay, so question, how does it work for retail, for example, transactions on POS?
Yes, I can take this. So for retail B2C, it's still not a mandate. But when it's gonna come, I think those POS machines again will integrate with some ASPs, and it's gonna convert into more digitized structure. But still, there is no mandate on this for B2C businesses.
Okay. Question, my clients are global. How will this work between them and me and between them and me? Or is this only for within the UAE? So we mentioned this. So, either they are part of the Peppol network, they can send you an invoice through Peppol, but also this is optional for them. They don't have to. They can still send
Yes.
you just a PDF. If you are invoicing outside the UAE, if your customer is outside the UAE, you have to go through Peppol. You have to issue an invoice through the Peppol network. Okay. Okay, so since PDF invoices and paper invoices will no longer be valid, how should businesses handle hybrid scenarios where a client still insists on a human readable PDF alongside the mandated XML file?
Yeah, I think still I think Nadim, you'll be able to answer this as well. Still, there is you can send this PDF, export and send this as a PDF, right? Even though there is an XML format, you'll be able to send them via email or whatever the format, exporting to a PDF and send it back.
Yeah, exactly. So your accounting software will generate the PDF behind the scenes and will send it to the tax authority, but it will still also generate the PDF. The PDF will, is the human readable format that you can send to that ends up being sent to your customer. Whether you send it by email, you can still send the PDF by email, or you let the service provider, or sorry, the accounting software automatically send it to your customer. So e-invoicing is applicable only for B2B business. How about B2C? Okay. No, you don't need to submit B2C invoices to the FTA, only B2B and B2G. If the revenue is below 50 million and dealing with B2C, then no need to do invoice, right? Yeah, no need to issue e-invoices. If it's a B2C, it doesn't matter your revenue. Does e-invoicing apply for UAE contracts or clients only, or also for cross-border clients in GCC or elsewhere? I believe we answered this question. How Wafeq will configure these changes, and when will we expect this to be configured if we choose Wafeq as a service provider? So once e-invoicing goes live, you will have a section inside your Wafeq account to sign up to the e-invoicing or Peppol network. So this is expected. So invoicing will be live in July. This is the voluntary phase where you can start issuing invoices on Peppol. And the same time, this feature will be made available in Wafeq. So for B2C, we don't know. There's no timeline from the FTA or the Ministry of Finance on whether they will implement it. What if the SME is tax exempt, Shafeekh? Do you still have to issue invoices?
I think it's if it's a tax exempt, it's still optional. If it's through a Pebble network, they can use it.
So one of our clients has revenue above 15, I believe they mean 50 million. But we don't. Do we need to do anything different with these clients?
One of our client has revenue, but we don't. We need to do anything different either with this client. Not now, but you have to be aligned on those timelines when it comes for below 50 million.
Question: digital signature is digital signature required for invoicing? Your ASP will automatically sign the invoice, so you don't need to worry about it. How will purchase orders be updated? So purchase orders are not in the scope of e-invoicing. Pebble network is designed to exchange different types of documents, including purchase orders. However, the purchase orders are not part of this implementation of e-invoicing. That's a good question. So one question is, how will the FTA determine your revenue? Like which revenue threshold, whether you fall under or above 50 million?
Yeah, I think it's used prior financial year or completed audited financials or tax reports. That's going to change. So I think small fluctuations will not be considered. So your last year financial statement will stand as consideration.
Yep. Question: how do we receive invoices in the ERP and do quality checks? So if your ERP supports receiving capabilities, then a purchase invoice will show up once your supplier sends it to you. And depending on how your ERP implements this feature, you can reject the invoice. Typically, you can approve the invoice, and so on. But again, this is an optional implementation. Your ERP might not support receiving capabilities. What's mandatory is only sending capabilities. Is Wafeq compliant with the e-invoicing? What ASP will use? So Wafeq will be the ASP also. Will not just be your accounting software. We will also be an ASP. So we will make an announcement in Q1. And on July 31st, this is the go live date of e-invoicing. The feature will be available in your Wafeq account. So what's the difference between simplified tax invoice, which is a B2C invoice, and a B2B invoice? So B2C invoice is called a simplified tax invoice. B2B invoice is just called tax invoice. That's the main difference. Do I send that? Yeah, go ahead.
No, sorry. I think there are a lot more questions coming here. Yeah, please, Nadim. I think we could answer a couple of them, and then if it extends the time, then you could book a meeting with any of us.
Okay, there's a lot of questions, so we'll pick two more. Apologies for everyone else, but please feel free to send us your questions either to Shafeekh or to us at Wafeq. So what about free zone transactions? Are they out of scope? No, they are in scope. What if the client is rejecting the invoice instead of accepting it as promised? This is a separate workflow, this separate topic. Rejecting an invoice, this is something that is up to the SME. For tax purposes, for the FTA purposes, so if you sent an invoice to your customer, it will be reported to the tax authority. If your customer rejects the invoice, you need to issue a credit note. So you will need to send the credit note to your customer so that the tax authority is informed that this invoice has been voided. Okay. I think we're
One
gonna.
more question.
Yeah, would you like to take one more, Shafeekh?
How to book out of scope sales and purchases? Supplier is from Korea. This is out of scope. Arranging the shipment from Switzerland to Saudi Arabia. This is out of scope, not necessary to be comes under. But again, if you are the counterpart, the cross-border transaction, if that they have Purple network, you can still use, but it's not mandatory.
Great. Okay, everyone. Thank you for joining. I'm gonna leave the QR code once again here for a free consultation with Shafeekh's team, Financials. Shafeekh, thank you so much for your time. It was a lot of fun, and have a great week, everyone.
Thank you, Nadim, for inviting. It was great interaction. Thank you, everyone, for joining today. If you have any doubts, please do reach out to us. Even you can go to Finanshels.com website. Our team can actually help you with all the expertise.
Thank you, Shafeekh.
Thank you, everyone. Have a great